Rural Funds Group, the farming REIT listed in Australia, is winding up its poultry business and has sold the assets for $72 million. This is being described as being at a modest discount to book value, and management is saying that this justifies their approach to asset valuation. They've been somewhat more quiet about the fact that the responsible entity, Rural Fund Management, recently filed their 2019 accounts with ASIC. Having had a look at the accounts, we can easily understand just why they've been so reticent, and we strongly suggest that any investor interested in investing in Rural Funds Group also takes a look. Now, before we go on, I must remind you that under Hong Kong SFC regulations, we can't make stock recommendations to the public, and none of what follows should be taken as investment advice. RFM's accounts reveal some very interesting facts. They're not very good at farming. According to the accounts, their farming activities lost money 3 out of the last 4 years. This does make us wonder about the quality of the farms that they're putting into the Rural Funds Group portfolio. You can also see that Rural Fund Management is highly levered and that interest cover is below 1.2 times. They disclose covenants at RFM and at the group level, which is quite reasonable. But they also mention in the accounts that they breached some of these covenants in 2019. And we don't remember this being disclosed to the RFF unit holders earlier this year, when they were asked to underwrite the debt at J&F, the new RFM subsidiary. Management also maintains that it doesn't make any money from RFF above and beyond its management fee. The problem is that in the RFM accounts, one of the largest revenue items is rendering services to the managed assets. This seems quite strange because we can't find any note of these fees in RFF's accounts, and yet in the RFM accounts they clearly say that it comes from providing services to the managed entities. It certainly looks to us as if RFM is quietly making extra cash out of the RFF assets, but not telling anyone. The big issue is that we think RFM has created the accounting equivalent of a perpetual motion machine. This enables them to bloat their fees while obscuring what is going on. RFM gets fees from RFF based on the RFF asset values. These values in turn are dependent on their rental yields, but over half of the yields come from RFM and its related parties. RFM books more profit from management fees, dividends and revaluations than it pays in rent. This gives rise to the interesting situation where the more rent it pays, the higher the valuation and the greater the fees it can charge. This is a wonderful self-dealing circularity that is clearly good for RFM, but does nothing to change the underlying value of the assets. We think it's simply a great way to extract cash from unit holders, which can then be covered up by asset shuffling and capital raising. The recent sale of the poultry operations was a fascinating example of exactly how this can work. Rural Funds Poultry has been one of RFF's largest cash generators thanks to some very high rental yields. In fact, we think these rents were so high that they underinvested in the underlying assets, which left them unable to compete, and that's why RF Poultry is now being wound up and the assets sold. Management says this is a good thing, but we wonder exactly how stripping out the cash and failing to maintain the assets has done anything other than destroy value for the unit holders. Cash from the sale will enable them to pay dividends this year, but it's not clear how or with what they're going to replace such high-yielding assets. Bizarrely, despite this setback, management says that the sale price vindicates their approach to valuation and asset management. We beg to differ. The poultry assets were valued using a capitalisation rate that is double that used for the other assets. In fact, if the other assets were valued using a similar rate, the NAV would collapse. The pricing discount they talk about is also somewhat disingenuous, because they're comparing the sale price of the assets plus the business to the underlying asset value. This is like saying that Google should be valued at the book value of its offices and ignoring the rest of the business. Until recently, poultry has been quite profitable, and so ascribing zero value to the actual business of growing chickens is ridiculous. These are just some of the problems we've seen in their accounts. As we mentioned earlier, we think that anybody seriously considering an investment in RFF goes a bit beyond management flimflam and digs a little deeper. Simply put, we don't think RFM has your best interests at heart. If you want to get more information, please visit our website using the link below, where we've uploaded some background material. If you'd like to know more about us in general, please visit bucephalus.com or send us an email. Alternatively, to keep up to date with our reviews, subscribe to the channel. Thank you very much for your time.